Welcome back to the hard time frame analysis for today. Our previous range from yesterday obviously worked in our favour. We took buys up to taking out the high, which obviously we've seen a strong close above the high, also caused by news. So we now have our new range from this high to this low here. Within this range, we've already seen mitigation of points of interest below the 50%, including liquidity, and we've started to see a push up now. So when time and price aligns, you can only assume one thing when it comes to volume. When time and price aligns in this way, where it's retraced and mitigated the points of interest within the 50%, if London Open is halfway through, like the push up to take out the IPH and protected low down here, if price is already pushed up this high already, when time and price aligns, we have to assume that we're going to be selling in this scenario. Obviously there is a chance that we could just take out the high, and this could be a very, very boring day for GU. We could just see it completely end up ranging, or very, very slowly pushing out to take out the high, and then New York session might see some sort of reversal. But in the majority of these cases, we are anticipating some sort of sell. When we're anticipating these sells, it's because we are failing to break the internal protected high, and if we fail to take out the internal protected high, then we are going to sell off no matter what. My first take profit would be this area here. However, we would most likely end up taking out the protected low. I tend to target the order blocks that cause the impulse up that fails to break. So for example, this order block here caused this push up, therefore this would be my target, because it shows it's a weak order block. However, realistically we'd end up taking out this low, and if we took out this low, subsequently we'd end up taking out this low. But to be conservative, I will probably target this one, or I won't set an actual take profit. I'll see how the market actually acts when hitting this level. But yeah, I'll be shorting down to that level myself. Our ideal place to short from is this imbalance right here, including the whole including this whole order block here. That is my ideal place to short from. This is our last point of true mitigation, the same as yesterday's order block down here. This is our last point of true mitigation. We need to take out the liquidity beforehand. This is the liquidity taken out, so we could be in a potential zone to sell off from right here. We can obviously see, just even from the 15-minute, we've had the Q1 high get swept. It's just too much confluence for us to sell off of. However, there is a slight chance that we could be taking out the high here and retrace a bit further. As you can see, Q1 kind of just pushes up a bit, so we could look at that as a continuation, so it ends up as XAMD, and then Q2 becomes the accumulation that is manipulated in Q3 and so on. We could see something like that, but we could also very easily be seeing some sort of setup form right this very second. We started seeing some breaks to the downside. I would be looking at, there's a lot of IC candles in there. I'll be looking at some sort of point of interest in here. First point I'd be looking at is this level here. That's a fib. Would be this level here for some sort of entry. It looks mitigated tad bit, obviously, because you see these wicks, but low time frame works a bit differently. This is just a point that I could be looking for entry. However, the chances are we would see an entry from this level up here, if this is the right setup anyway. But keep an eye on this level here. Yeah, probably selling off from here, but who knows, we could see multiple things happen in this scenario. But either way, I'm selling down to minimum this level here, but I probably will end up targeting this low here, and if I end up targeting this low, I'll probably end up targeting this low. So yeah, we're aiming for the complete low of the whole swing move.